And I don't know about you, but I have no time for small thinkers with little dreams. They will try to beat you down so that you see the world from their perspective. No, thank you.
Is it fair to call Ethereum an altcoin, or is that
well,
gross mischaracterization?
Well, Ethereum is a platform. I mean, there is a coin called Ether inside of it, and you can build your own coins on top of it. I'd say we are a lot more generalized.
Okay, so it's more like Ripple to XRP.
Yeah.
Okay.
What's up, guys? Kevin Cage back with another cryptocurrency update, and we are back to a total crypto market cap of 1.67 trillion. We can see that the market sentiment overall, the fear and greed index, is back to being neutral, dead center at 50. And last month we were at 20 in extreme fear. And this just goes to show that all it takes is a single candle, whether red or green on the chart, or a single piece of news, whether that be positive or negative, to be able to entirely change our perspective, or the average retail investor's perspective on this market. And rule number one, retail always loses. Next up, now I will be brief here in this rapid fire news segment today. So we have digital asset investors sharing this, essentially Vitalik acknowledging the difference between Ripple and XRP. Now, I'm sure many people are aware of Vitalik's past, sleeping on Stephen Thomas's couch back in the day when he was an early Bitcoin developer and going to the Ripple office on a daily basis for a few weeks discussing smart contracts. And I found that to be quite interesting. And also a little background on Vitalik, and I like ETH, guys, don't get me wrong, but I just think the tribalism is kind of silly between platforms all the time. But anyways, later in 2013, a young Bitcoin developer crashed on my couch. Now this is Stephen Thomas speaking, for a couple of weeks while visiting San Francisco. In the afternoon, he would come to the Ripple office and join our discussions about smart contracts. His name was Vitalik Buterin, and these conversations led him to incorporate Ripple's key value data structure into Ethereum. People often ask why we didn't release our prototype, preempting Ethereum, and this is referring to Codius, bringing smart contracts to the XRP ledger years ago, and potentially attracting developers to XRP instead. At the time, we underestimated the amount of interest there would be in smart contracts, conditional code. Moreover, building this architecture seemed daunting. Hats off to Vitalik and friends for attracting a community large enough and fervent enough to pull it off. And as we know, Codius works differently than smart contracts in Bitcoin or Ethereum. The contracts run on independent hosts without an underlying blockchain, similar to traditional hosting. This allows them to interact with any service or API, scale infinitely, sounds like DAG of Constellation, and read from or write to any blockchain. The key challenge of smart contracts, interoperability, was solved. If you want to check out the rest of this Medium article, here it is. Next up, guys, really quick, Coinbase is now available in Germany. And from the Nikkei and Gold Telegraph, Cambodia aims to wean off the US dollar dependence with digital currency. The mission of the digital currency is to increase the usage of the local currency, with the long-term goal to solely use our local currency. From Assistant Governor. Surprise, surprise, getting away from the reserve status. This is something people have been talking about for years and years and years, and now it is finally happening. And the weirdest thing before this, Cambodia just had their first ODL corridor, by the way, for XRP. And what happened? Well, last year, Ripple meets the Central Bank of Cambodia, SBI Asia, to implement on-demand liquidity, and this happened last year. And guess what happened now? And of course, this just recently happened. 1 year later, SBI Ripple Asia launches Cambodia's first cross-border remittance service using blockchain. What are they using? RippleNet, which plugs directly into the XRP ledger. And this is between banks in both Cambodia and Vietnam. So we have the National Bank of Cambodia, we have TP Bank in Vietnam, and then on top of that, NASDAQ has announced Ripple on-demand liquidity corridor between Japan and the Philippines. 1.8 billion in yearly remittances right here alone, and Ripple's continuing their expansion throughout Asia after that 40% stake in Tranglo. And now we have to keep a closer eye on Turkey, Australia, and Brazil. So now back to Ethereum and talking about what this new update called London could mean for the Ethereum price in all of the cryptocurrency market. So remember, back in November, end of last year, all the way up until April, even May, the focus, the 100% focus was in fact on Bitcoin. All of the news and media outlets shilling, talking about Bitcoin, putting it on their books, etc. Now, you can see that the narrative is shifting into Ethereum. And guess what? Ethereum, yes, it is better than Bitcoin. Yes, it has hundreds of thousands of projects built upon top of it, is ERC20s, there's NFT capability. You can't really ignore that. And what I think is that this is going to bring a lot more money and a lot more space for that next run up for the cryptocurrency market. You can see tons of articles. This is on CNBC.com. A significant upgrade to Ethereum activated today that will impact its supply. Here's what crypto investors should know. Besides the price being up another $200, the upgrade called London includes Ethereum Improvement Proposal EIP 1559, which aims to change the way transaction fees, aka gas fees, are estimated. There's plenty of Medium articles you can check out about EIP 1559. And as ETH grows more popular, you're seeing double-digit, even triple-digit gas fees. This is a huge concern for me personally as an investor, and I know many ETH maxis are more confident than ever with this update to push price up, but truth be told, these high gas fees are pushing many retail investors and institutional investors for that matter toward cheaper, more efficient platforms, such as Cardano, such as Polkadot, and even DAG, Constellation, which is an up-and-coming project that many people are still ignoring, has infinite scalability and is feeless. And I love Ethereum. I know smart contracts are in fact the future, but to be the bedrock of the future financial system, we need something more efficient. We need a better consensus mechanism. We need little to no fees. That's why people are paying more attention to other smart contract platforms. There was very little visibility to gauge how expensive gas fees would be. So let me just read this quick summary. So this upgrade to the fee system would provide the following benefits to Ethereum and its diverse users. It would save up to 90% of transaction costs, sounds good. Greatly improve the UX by automating the fee bidding system, provide a predictable fee system for advanced users, reduce unexpected wait times for transaction confirmations, and I'm sure many people have, signed a transaction over the Ethereum network or sent a transaction, and then all of a sudden it's taking an hour and you want to boost it, so you pay a little bit more to get that transaction that finally goes through. That's just not something that I see that is ready for mainstream adoption. And I don't care if that's hard to hear, but that's the truth. Allow users to still jump the line when network is congested. Disincentivize selfish mining even if fees dominate rewards. Proof of work does not work. Proof of stake is much better, but don't let maximalism and tribalism stop you from improving. Never get satisfied. Satisfaction is the enemy of progress. Enshrine the economic value of ETH at the protocol level. Now don't get me wrong, I hold ETH. Yeah, to the moon. Send it to 5K, send it to 10K, I'll be happy as can be. But I'm still going to be talking about better technologies and better ways to do things. And that is why I urge all of you to look at other assets. And this is not financial advice, but look at a variety of assets. And yes, I hold ERC20s. I'm bullish on a lot of assets that are in fact on Ethereum. And now, could they be agnostic and move to other blockchains if need be? Yes, Q&T, API3, a variety of assets can do so. But this is why there has been such a huge focus on altcoins. And these high fees, although Ethereum should do well, and in my opinion, Ethereum is still here to stay. It's not going anywhere. As an investor, I'm a bit more interested in these up-and-coming assets. They have better technology, and they have a stronger potential for a much more significant ROI in my opinion. So with that being said, sure, send Ethereum to $5,000, send it to $10,000 and beyond, but overall, I'm just more interested in other assets that are listed here. Q&T, agnostic, even though it is an ERC20. HBAR, it is a DAG, a directed acyclic graph, just like DAG, DAG. These platforms, this is essentially pennies, like sub-pennies, and DAG is feeless entirely. Algo and ADA are fascinating projects. I want more and more development to come. I'm excited. And of course, Flare Networks and Flare Finance, focusing on the interoperability. But don't get it twisted, XRP is best positioned today and is already being used for cross-border payments at scale. And that's just something people forget. XRP is not competing with Ethereum. Ethereum is not competing with XRP. Proof of stake versus proof of consensus. But another major change under this EIP proposal, or I should say upgrade, called London, is part of every single transaction fee will be burned or removed from circulation. So there's going to be a reduction of supply on Ether. And what do you think happens eventually, guys? And then in tandem with network effects, just like Real Vision Finance emphasizes, yes, I am bullish on Ethereum long term. We have all kinds of titles going around the news, even right here. Ethereum is burning $10,000 every minute after this EIP 1559 upgrade. and over $2 million worth of ETH has already been burned since the London upgrade. And I know there's mixed emotions about this upgrade, and I think this is going to bring a lot more attention to the cryptocurrency space as all of these tokens continue to climb upwards again. Next up, so it seems like both the SEC of the US and Gary Gensler are trying to update their public image. I did see Crypto Eddie point that out, and I thought it was comical because I completely agree. And right here they say, rules mostly adopted 16 years ago do not fully reflect today's technology. We need to look at ways to freshen up our rules to ensure our equity markets reflect our mission, maintain fair, orderly, and efficient markets, and ensure we protect investors and facilitate capital formation. I would love to know which investors you're protecting. And I personally do not believe they are protecting any retail investors in the United States. There's a variety of countries doing a much better job in terms of clarity to protect retail investors, the everyday people that this country should serve. The UK, Switzerland, Japan, Singapore, and a few others already have clarity for XRP, and they've declared XRP to not be a security. So if it's not a security, what will it be deemed? A currency? A commodity? Some new type of classification? A payment token? You guys let me know. I love hearing Stuart Eldoradi's thoughts as well. And he is general counsel for Ripple. I love the amount of retweets that this gets because the XRP community is alive and strong, and we're well aware of how this game is played. Let your voice be heard across all of social media. You have a voice and it matters. Next up, so right here on CNBC, this will probably be the first step. What crypto investors should know about the Senate infrastructure bill proposal. To help fund the $1 trillion bipartisan infrastructure bill, the Senate has proposed a provision that would impose stricter rules on how digital assets are taxed. In the latest version of the bill released on Sunday, the provision would require crypto brokers to report specific information about crypto transactions, like price points from when users bought in and sold. This would be in addition to reporting transactions of more than $10,000 to the IRS, which is already mandated. And the definition of a broker is creating some confusion. Currently, the bill defines a broker as any person who is responsible for regularly providing any service, effectuating transfers of digital assets on behalf of another person. And the concern of this definition is that it would target miners, developers, and even stakers, and others who do not have customers and therefore wouldn't have access to the information needed to comply. As a result, lawmakers are working to clear up all of this confusion, and we'll simply have to see what comes out of this. While the original definition of a broker would not have impacted investors directly, the language previously could have pushed crypto business and trading overseas. Absolutely. There has to be clarity, specific guidelines of what you can and cannot do. And last but not least, guys, to finish up with a bit of a rant, you can apply this to any digital asset or any investment that you have. And again, this is not financial advice, but if you do need reassurance from others about your investments, you probably should not be investing in that asset to begin with. And I feel like I say this every few months. If you're afraid, it simply means that you are uncertain and not informed enough of the possibilities. You have to know of the upside and the downside. Do not buy anything that you do not fully understand, and try your best to have healthy expectations of the risks and the timeline. And just like King Solomon was saying on Twitter the other day, find assets that nobody cares about before everybody's talking about them, with real world utility or sound technology that has said potential to provide that utility. Find them, accumulate them, and wait. I feel like most people are looking on the 30-minute or daily chart a little bit too much, and you have to zoom out. Imagine if you had Ethereum years ago at $10, and 3 weeks later, you were complaining because it was only at $7. That's most people's mindset on this market. They want everybody to prove it to them. Now, of course, there's nothing wrong with taking profits, but I just encourage everybody, when in doubt, zoom out. Look at the macro. Find, accumulate, and wait. It's not easy to do it, and that's why very few people actually make it. And I don't know about you, but I have no time for small thinkers with little dreams. They will try to beat you down so that you see the world from their perspective. No, thank you. I'll catch you in the next one.